Hello and welcome back, folks. Welcome to the Short Vol Show Live. My name is David, and we are in a day which features another rally after a big sell-off in volatility yesterday coming in. We had a run-up over the end of last week that made it kind of seem like maybe this market was stumbling. VIX popped, went from about 13.5 to over 17 in the VIX, with, of course, a parallel pop in VIX ETPs, UVXY trading over 50 at one point on Friday. And but given some time over the weekend to think about things, people realized that the world wasn't coming to an end after all, and the resulting crack in volatility meant UVXY retrace back down below 40. So an 8-point swing within 2 sessions, and just a real classic opportunity to put on that short vol trade. I talked to people that play this from the long side who got long ahead of this week and last week, and then were able to make money as things went up. I talked to people on the short side who put on a position and were riding it down, and some of them still short now. And everybody seems pretty happy and making money both ways in the volatility trade. Now, this is a real simple thing here, folks. What people are doing, they are, the VIX just fluctuates up and down, and what people are doing is when it's down, they buy it, and when it's up, they sell it. It's not rocket science. Let's take a look at the VIX here. And yeah, I mean, things don't always work out as nicely as they did in this particular case. But when we pull up the chart for a last week, let's pull up the actually just the 5-day here. You're going to see this run-up Thursday in the VIX. Peaks at 18 and change, and then the subsequent sell-off, and we see things just come off, and it's a beautiful thing here. Now, what you obviously don't want to be doing is jumping in when it gets to a recent high, or really kind of selling it too much in the hole. Things got back down, and a lot of people sort of are looking to reset here. Other people are saying, okay, well, this is the time to really short it. Well, that remains to be seen. Volatility now to 13.5. Yeah, it can go to 10, but it's more likely that it stalls out around, if it gets to 12, people are going to be really noticing, wow, that's really low. And I think there will be some defenders of volatility. Not that that's the way it works. People get confused with UVXY or VIX products that it's a supply and demand thing that just relates to the VIX products. When in reality, VIX products are really just reflecting the order flow in the SPX options, which notionally, and by notionally I mean as far as the actual dollars and cents are concerned, are a bigger piece of the pie than the actual VIX products. Now, the big players on Wall Street, though, will switch stuff up, and they might, when they want to do the same thing, they can do it in different ways. If they want to, instead of buying SPX puts, they can go ahead and buy some VIX, or even a VIX ETP. Instead of selling, SPX puts, they could come in and, and short some VXXB, or put some sort of put spread on. So it's not always clear exactly where in the line people are laying off or adding to their exposure, but what is clear is that the VIX oscillates up and down, and so and it always comes back. So if you can trade around the average, and these recent days, the average has been something around, I'd say 15.5. If you can kind of trade around that, you can make money. I'm trying something new this time, and actually I got slightly long the VIX by way of selling a UVXY put spread. I sold the 41.39 put spread in UVXY a couple weeks out, and what I'm looking for is a little pop off of this recent low. It just takes one down day. We get a little pop, and I'm out. I started to think, well, it's kind of silly that I'm able to pretty well jump on when things are higher and ride the things down, but I lay off of trying to ride things up. Now, I talk a lot in finance about we don't have to be everything for everybody, and we don't have to learn how to do every trade. And it certainly is important to find what you're good at and stick to that. And if you can do something really well, one little thing really well, then you can make a career for yourself. For example, selling volatility. If you can pick the point when to short these things and get in and get out effectively, then you can make a career out of it. That being said, however, I did want to try to maximize my potential by trying to play this to the long side a little bit as well from time to time. And that's sort of what I'm doing right here today by selling this put spread. And I'm going to monitor this very closely. It's not like I'm just going to leave it till expiration and do nothing to it from now on. If it starts to hurt me badly, then I will back off it. I've been involved in some other calendar spreads, which I've talked about a little bit to people. And what it involves is buying an option, usually an at-the-money option in a stock that is going to declare earnings, buying an at-the-money option a few months out and selling the front month fat premium against that option. And it's a trade that works as long as the stock that I am trading doesn't move too much on earnings. So, for example, of one that didn't work, here we go, SFIT. Now, SFIT, and when I look at the chart now, I'm sorry, SFIX. Sorry, I got the wrong number here. SFIX. When I look at the chart, you see that it's had a lot of movement. But let me get out of the way once again here. And you'll notice looking at charts of different durations tells a different story a lot of times. But here's the stock movement around. And so coming into earnings, yesterday stock was trading, I think, 26 and change. And I did the spread. I bought a couple months out the 25 call, and I sold the 25 call in the front month. And same with the 20 call. Now, when stock gaps up as much as it did, this thing made a big move. It was over a 25% move. Right now it's up 27%, trading 34.36. The strike, things went so far away from the strike that the calendar spread between the months is worthless, because in essence, as we move away from the strike, this becomes the value in this spread is basically the value in the farther out months put, and thus puts become worth less and less as this thing gaps away from us. It's kind of like, and when you put the spread on, you're kind of like selling a straddle, but as you move farther and farther away from the strike, it becomes more of just a one-way trade where you're actually just long these puts. And as we get up to like 35, well, the front week puts are definitely worthless, and the back week puts are worthless as well. And I actually was in the situation where I needed to get out of my spreads because I was short front week calls, and I would get assigned on those calls, and so I actually had to kind of sell the spread out at a discount to get out of it today. So, for example, my worthless spread that I had 3 times on, the 20 spread, I actually sold for a credit just because I paid the toll keeper basically to get out of it, so I didn't have to deal with assignment and all that sort of stuff. So that one didn't work out so well. The other one that I did, which was a similar one, was COUP, and this was a higher price stock. Didn't move as much on earnings. It's currently down only $1. And I did the same thing. I traded a spread, and it worked out. And the reason it worked out was because the stock didn't move that much. Now here I traded the March April 95 call spread I bought, and I ended up making a little bit of money on that one, and it kind of canceled out the losses in SFIT. So to date now I have done 7 of these calendar spreads recently, and I've won on 5 out of 7, which is great. The other good thing about this is that your losses are not going to be huge blow-ups on these spreads, because you can only lose what you put into it, and so it's not like, okay, 5 out of 7, but the 2 losses were huge. No, the 2 losses were not very huge. And to be fair, I haven't done these trades in size because I'm still kind of feeling them out a little bit before I do any one of them too seriously. I was very successful in the very first one I did, which was ICPT. All right, so now comes the fun part. I'm going to ask out to you, the viewer. I want to change the channel name because I want to appeal to a broader amount of people. I'm going to be talking about how you can make money in UVXY easily and lay it out just very simply, the ways that you can make money. And therefore, I want to become the premier go-to guy on YouTube for the VIX. There's certainly smarter people than me out there. There's certainly more authorities than me out there. I could think of maybe like a ton of people, but Vance Hartward comes to name. But these people are not always interested in being out in the public all the time and being involved in a YouTube show. So I'm going to rise to the challenge here, and I'm going to be rebranding the show so it's focused specifically on the VIX and how you can make money in it. Now, the content isn't going to change that much in that I'm still going to be discussing other issues, what I've been doing, what's worked for me, and help you generate trade ideas. But it's going to be a little more fun. We're going to have some fun with the branding, and I hope you like it. I might put out a poll on Patreon, possibly for Patreon supporters, of possible names for it. I'm messing around with a couple names. I really love to sit there with GoDaddy and see what domain names are available on the internet for a website. I am developing a new website, and I just go to GoDaddy and I put in all these different names, and I sit there for hours wasting my time doing that. It's pretty fun. And you know what I found is that there's all these new extensions now. So it used to be, you definitely want .com no matter what, because that's the most recognizable one, and you need that to everybody's going to go to a .com. But these days there are so many different extensions besides .com that it kind of takes the value away. All these people, they paid up so much to get their own name on this .com, but meanwhile there's like 100 different there's .co. If you spent 50 grand to get your thing .com, and then somebody else has the same thing .co, and they spend 99 cents for it, kind of is a waste. So, for example, I was just looking at VIX, and I don't want to give away my favorite picks here, but VIX Shop, VIX World, VIX Rocks, VIX Solutions. There's all these ones available. VIX.1, VIX Work. Because of all these new extensions like Beer and Vet and City and Vegas, Love, Legal, there's tons of different names out there that you can pick up. So I've been having fun with that. I want to have fun with the channel. I want to get people excited about making money, and I want to get more people involved. I know a lot of people on here who do follow have been doing well, and that's awesome. I want more people to learn about the VIX. I want people to learn about the term structure and how Contango works. It should be like, if things worked out the way I like it to, everybody would know what Contango is, and everybody would kind of understand the edge that has to do with the VIX, and people would know that Well, you don't really want to buy a TVIX or a UVXY to hedge your portfolio against the market going down. It might be something that that in a knee-jerk reaction, if bad news comes out, you try to scoop TVIX really quickly, but it should only be something that you hold on to for less than 48 hours. That's the guidance I give most people, and people should know why, because there's contango costs related to it, and also, especially with TVIX, since it's a leveraged product, it tends to drift lower due to the rebalancing of it every day. The other thing is just that people should know that the VIX oscillates and that it always comes back to its mean reverting. And that means that it's not going to be like a runaway stock that just gets away from you. I was trading Wayfair. Stock went way up on earnings. I shorted a little bit of it, and it just kept going, and it just got away from me. That can't happen with the VIX, because if the VIX gets to an extreme spot, either high or low, then that makes it even more likely that it's coming back, because it always comes back to the mean. And it's not like, oh, someday it's not going to come back and it's just going to be gone. It doesn't work that way. It comes back. So that is a aspect of the VIX that makes it not only a pleasure to trade, but it takes away a random factor. When you're trying to trade stocks, there's so many variables that you can get caught up in them, and one of them can take you out of the game. The VIX, you subtract a lot of these variables. You've got a defined range. It always comes back to there, and you've got contango working in your favor. So you've got a bunch of crutches to start with, which makes it easier to make money in the long run. And I know we had a period last year where the VIX went straight up, and this isn't normal. And a lot of people got hurt. Actually, there were two events last year that were really crazy. There was the Vomageddon, and then there was the pop over December. I'm just pulling them up for you here right now. But and these are two anomalies. And so if you were trading these things during these anomalies, you might be like, well, the VIX is impossible to trade. But the real truth about it is that even during these anomalies, the VIX came back. And you can see them right here next to me. These two spikes last year. These spikes like this usually don't happen every year. They might happen every 3 or 4 years. We had two within a short period of time, and they took a lot of people out of the game. But the reality is that it comes back. You can see it coming back there, and you can be confident that it will come back, and that's what makes it a beautiful thing to trade. I want to teach the world how to trade the VIX, and I want everybody to make money, and it would be so cool when a generation of millionaires who have been watching my channel can come forward and say, Dave turned me on to this stuff, and I really appreciate it. My family appreciates it. Thank you. That would be really cool. Much better than me sitting here and telling you, oh, I made 20 grand today in XYZ. Aren't I great? Please buy my class for $1,000. That's not my way of doing things. All right. Thanks for watching. We'll see you in the next one. And until then, stay green, I guess.